Back to Nampak and your valuation.
Generally believe it's slightly undervalued to fair value at the moment. So we're currently shareholders of the company, but we'd probably wait for a slightly lower price before increasing our stake any further. But like I said at the outset, are happy with the changes that we've seen, both at the management and the board level, which we've been calling for some time.
Late out this afternoon, news across the wires that Adcock Ingram, again holding a shareholder meeting today. Jonathan Lowe, the CEO, saying that trading conditions for prescription and chronic medicines have been tough since October, and that he doesn't see any upturn in consumer demand for the rest of this year. Adcock Ingram is a stock that you follow, I believe?
Correct, it is.
Can you give me your view on what we're hearing out of that company?
I mean, they seem to be very conservative, but I guess that's in line with our view that the consumer is under quite a lot of stress. And Adcock generally paints sort of a clear picture of what's really happening. We've seen some other management teams talk about the end, or that the things are getting a lot better, but when the results come out, the top line looks pretty weak. So if we look at JD Group, they're a company that's been calling for the sort of the end to the recession and things getting a lot better. But when you look at their results, first 4 months sales were down. Adcock have been a bit more sanguine about their prospects, and arguably they're in a slightly more defensive sector in terms of pharma versus furniture.
Coming back to JD Group, do you think that this one is ready to be picked up at this stage?
Our fair value is very close to the share price, so no, I think it's fully valued at this point in time. Also, they're coming off quite a low base, so the expectations out there are quite varied. At the start of the year, people were looking for almost 5 Rand a share of earnings. It's now in the last week been marked down to about 4 Rand, and you know it could definitely go lower if their bad debts don't roll over. That's really where the earnings growth is coming from, JD Group in the current year. Last year, if you strip out the funnies, they also had a competition commission fine. They delivered about 3 Rand of earnings, and I think it would be quite negative for the stock if current earnings expectations fell from the 4 Rand to that 3 Rand level.
Johnny, what do you make of the equity market at the moment in South Africa? Is it a difficult market to try and stock pick in with valuations across the board pretty much on a par?
It's quite volatile, and obviously our market's driven quite a lot by the heavyweight commodity stocks, and those commodity prices are seesawing to and fro. So it does make it for quite a difficult time, but we like to sort of take a slightly longer term view. And on that basis, we believe that the market is expensive at current levels, just given that profit margins are historically coming off very high levels, as are things like commodity prices.
Do you believe that we've got a fall or a pullback of 10 to 15% in the offing?
I think, as we've said before, either we will get a sort of a sharper correction, or the market will go nowhere for an extended period of time. Like I said, I think the market is expensive. At one point in January, it got up to an historic P of about 17.5, with the recent sort of 6-7% pullback. We're probably at around 17 times, but historically that is quite an expensive level to be buying the JSE and making good returns on a 3-year view.
Johnny, do you keep one eye on the international news flow? Obviously, our market taking a cue extensively from what emanates on the global front, specifically in the US, and we're also being buffered by the Eurozone, which is back as our top trading partner, just pipping China to the post. We've got jobless claims data out, or non-farm payrolls out on Friday out of the US. Do you expect that to be another market-moving number?
I mean, those job payrolls are quite volatile out of the US. Our key concern on some of those stats out of the US is that they sort of tend to sometimes fudge those numbers. Our long-term concern is we can't really see the economy picking up to where we were pre the crisis if we don't get some kind of job creation out of the US. So the long-term jobless numbers are a long-term concern for us in the US.